What's up, everyone? We're live. I'm sitting down today with Michael Toma. Michael is a professional trader based in the United States at the moment. So, how's it going, Michael?
Very good, Etienne. Great to be here with you in the group today.
Perfect. So, today I want to discuss how to be able to trade for other people. I know it's a topic that people ask a lot. And I believe strongly that this is the easiest way when you want to scale up your trading. You get money from investors. Of course, you got to be ready for it. But once you do that, then that's an easy way to kind of grow your income month over month and to kind of expand your business. So, Michael, I want to ask you some questions first. And if you guys have any question in the chat, make sure you comment below in the chat, or it should be on the side, wherever that is. But let us know your question, and we'll cover your questions just after. Okay, it could be a question on any topic. Michael's been trading for how many years now? Like 20 years or more,
Too
right?
many, too many.
Awesome, perfect. So any question you guys have, we'll cover that, and this gonna be interactive. So like the best event will be like this. The best YouTube lives are the ones where people interact, because you can get like we can talk about your topics, the thing you want to learn about, and we're able to kind of cover that more. So and also, you guys can comment in the chat and let me know where you're watching this from. Also, your name. That's always awesome to know. SDKP asked about FTMO. We can cover that later.
Oh yeah.
But let me know what you want to learn about FTMO exactly, because FTMO is like really broad. So, what's up, Josh? Welcome. Awesome. You guys are joining us live. Perfect. So, let's go with that. So, Michael, I want you to kind of tell people a little bit about what you do in terms of trading for other people. What does that look like?
Yeah, I trade several accounts. Obviously, some, my own personal accounts, friends and family, and as a trader develops, and like you mentioned earlier, you want to scale your business. It's not about just trading other accounts. It's scaling your business, and if you specialize in something, whether you're a car mechanic or a surgeon, you just want to scale your business up in some way or another, and that is just a logical, avenue to take. And if you have the results and have the ability to manage this type of operation, it generally falls, pretty much falls into your place. There are certain dynamics, which I'm sure we'll talk about, that are much different than trading for your own accounts. But it's fulfilling, yet at the same time, it's hard work as well.
Definitely, it's like a different game, at least from what I've seen in the past.
Yeah.
I just want to look at the chat a little bit. I've seen, so Josh, we have Jason, and Jason is part of the academy, and we'll leave a link below in the description for a case study that we've built. So kind of like a video you can watch, video lesson, talking about success stories from people in the academy and kind of how we help people to be able to trade full time, overtime, and quit their job. So link below for that in the description. You can check it out now or after. Totally fun. I see we have Niels also in the academy. So Niels from Belgium, wonderful. Gerald Aruba, perfect.
Nice.
Awesome. So that's really good. Here's South Africa, Jonathan. Good. India, Vishal. Excellent. Perfect. So, Michael, let's go back in time and can you tell people how did you get to trade for other people? How did that happen?
It kind of, I mean, I was open to the idea after I started to become profitable and I started scaling up my own accounts. I started looking to the next step in this journey and said, what can I do? What are some of the other ways to do it? Is it size? Is it, capital? Is it becoming a specialist in certain areas? And then there's the question of, where does the funds come from? Does it come from, external overseas, friends and family, things like that? I think the key and what happened to me was I was just open to the idea. And I surrounded myself with people who did this type of work and also just surrounded myself with traders. Traders know people who trade and know people who have capital. And really, I didn't really promote myself, and I never have actually. And just, when you just do that, and whether it's some days where some traders are just frustrated, said, Mike, I can't do this, I'm struggling, or there's a change in my lifestyle where I can't monitor trades. Can you help me in that regard? And I just took on a case by case basis, but it kind of falls into your lap that way. At least that's happened, with me. Um, I kind of like that way, and it just naturally progressed into that space. But again, I still didn't lose the sort of core foundation of trading my own accounts at the same time. And the best part is I was able to scale it while not giving up my quote, real account job.
Mm-hmm. That's awesome. So, how far after you went to become a profitable trader did that happen? Was it like a year after, 5 years after, 10 years after? How did that kind of, or the thing is, there's like a specific time frame you should look for, or can you trade any time for other people?
Yeah,
after
I
you're
mean, I think.
profitable?
Yeah, sorry. Yeah, I think that the good question. It really depends on the individual. I didn't go right after I was profitable and saying I want to start trading big capital. I started doing work for a prop firm, and I think that was sort of the volcano that launched, so to speak. That I was surrounded by a lot of people with a lot of capital who knew people who had a lot of capital. So I surrounded myself, and this is sort of like a takeaway. I surrounded myself in an environment where there were people who traded and had capital. So that was sort of the things that, maybe that's something that's the right timing for me. That took a few years though, several years, but I wasn't pursuing it. So I mean, once I was engaged in a prop firm, it was like I'll be honest, it was within 2-3 weeks that I was starting to get solicitations and things like that. But to get to that point was, I would say, I had never thought about it, 3, 4, maybe even 5 years. But once I got into that circle, it was just everywhere. I mean, this always capital looking to find a home.
Definitely. It's like one person that has capital and you trade for them, then they refer to someone else, then someone else comes in, and it just goes like that. I
Yeah.
think that's what I've seen. Awesome. So, when you went to trade for investors, what did you present them? Did you kind of just talk and share what you were doing, or how did that go?
Yeah, actually, this is a great. I love answering. I love talking about this because I think I did it a little differently, or I realized I was doing it differently. I didn't know how to do it. There's not like a playbook, and I didn't want like a playbook to like how to get investors. I really kind of was doing my job, and if it fell into my lap, and I would be really picky on what I would do, and I tried to stick to friends and family and people I knew. I really didn't want to solicit like money, and there's a lot of issues behind that as well. But one of the things I specialized at, what I felt my approach was very unique, and I'm curious what your with the people on the live session here thinks about it. I looked at it as, I don't necessarily want to trade your money. What can do is I have a solution for your current trading platform, for your, whether it's a prop or whether it's just a big investor. I'll give you an example. I look and say, and I'm a risk manager by trade, so I'm always thinking about risk management and portfolio risk management. Say, for example, rather than say, hey, I can trade your money, think of it this way: what do you specialize in? So I would look at certain uh, operations that are already underway and say, you're a forex shop, and I get it, but do you realize that like 90% of all your trades are correlated to be long with the U.S. dollar? And sometimes they look at you like, well, what's the difference? I says, well, if it goes the wrong way, I mean, you're trading a US dollar in one direction. I says, so what's the solution? Well, maybe we can add some hedge with some futures in there, or maybe sell some premium options in that portfolio. I can trade that for you. And says, and what you're doing is you're not just going to get better return, but your risk is going to go down on the portfolio level. All right. So what I did was I provided a solution, a risk-based solution that was sort of interesting to them, and said, tell me more. And once you get tell me more, then it's a question of how you're going to implement and things like that. But I found that approach interesting. I provided a valid solution as opposed to saying, do you have any capital that I can trade? And to be honest with you, most of my sort of forays into this space were based on that type of premise.
Yeah, that's I think a common thing that we just avoided there is that just like you don't approach people asking for capital, you approach them as like proposing a solution and a way to solve the problem because people won't give you capital for fun. They give you capital to solve the problem,
Yeah. I
and
mean,
the
isn't that
problem
true
can
in
be that.
any business, Etienne? Like, I mean,
And maybe yeah,
yeah,
exactly. So
yeah,
it's weird that people in trading or something else approach it the wrong way
yeah.
on that aspect. So
Yeah, and
I
actually,
see
and
that.
here's the thing: not only are you appealing to the traders, but think about their investors when they hear this. Say, "Hey, wait a second, we're correlated to a certain thing, or we have a portfolio risk that we didn't really know about, or we're just assuming that's going to be managed correctly. This interests me." So not only do you pique the interest of the traders, you pique the interest of their customers. Now all of a sudden, now like exponentially, the need comes into play, and they're forced to kind of make a decision.
We have a question that just popped up in the chat here. The question is, so to involve investors in your trading, do you need to have a track record of like 5 years with good and bad times? Or what kind of proof do you need to have to share with those investors, in your
Yeah, great.
opinion?
Yeah, great question. In fact, just the fact that the person's asking that question kind of It lets me thinking that they're obviously thinking about this thing. I think, I mean, again, any customer, it all depends on the customer, but to be honest, yeah, you really need a track record. And I'll go one step further. If it was me, I want that track record not just back tested on a simulator. That's fine, and I want it in different types of markets. Um, I mean, we're doing this and where volatility is like crazy now, so I'd want to see that type of thing. I'd want to see if the back test, even if they didn't trade it live, back test in like say the 2008, 2009 era. I want to see that. But I'll go one step further. If I was the investor, and you should anticipate this, I want that back test certified, whether it's be it by an auditor, preferably maybe a risk manager, a trade risk manager. Once you have that certified, it's just a great tool to have. But I really, and the reason I say certified is you can have a back test that looks great with a great equity curve, but realistically, how was that traded? I mean, did you really stick to the same size during those volatile markets? So maybe not, but it can be very deceiving. Once you have that certified, then you could use it as part of your sort of package to discuss that, not just with investors, maybe a prop firm, things that you're even like I mentioned, like a FTMO, like a funding type program. If you have that, it's gold. But you really, I suggest at least, the golden rule is 18 months, but I'd want to see, or I would suggest, have it where it covers all different types of markets.
Here's something that I think people do wrong also in that regard is like most people are gonna ask, okay, so what does investor require me to show them to be able to trade for them? But that's only part of it because sometimes what I've seen is that the investors they don't care too much, and it's like your job or your responsibility to have what you need to have to show yourself that you're like solid and profitable. And if you don't have that, then maybe you'll trade for them for a while, but then you'll fail. So it's your job to have the right things in place.
Yeah,
So I think that the investors don't always ask. Some of them might ask, but some don't. And so if you just wait for them, then you just like rely on them, and that's not the best way to go. I think.
I
Would you
agree. I
agree with
mean, you
that,
should have
Michael?
some basic stuff like a fact sheet. I always like to see like fact sheets, or I always supply that. Some of the bigger ones, bigger accounts may want like disclosure statements and things like, how do you
Mm-hmm.
handle what's your business continuity, backup server information, things like that. You'd be amazed though. The bigger size accounts, you'd be amazed how little they ask for. Sometimes the smaller accounts just want all these like checklists of dotted I's, and a lot to ETN becomes trust. It's when you have a relationship. If you're just starting this cold with someone who you don't know, it's just like it's a kind of a rough go. You may have to be a little
Yeah.
formal, but if you have a relationship with the person or a relationship with the person who's referring you to another person, that goes a long way. Because once trust is built, this is a business based on trust and supported by valid, data and valid statistics and how things are going to work. So at least have a fact sheet, an approach of what you're going to do and what you've been doing and how you're going to implement it, and also have in there a communication plan. How are we going to communicate, results and things like that on a regular basis?
What would you say is a good proper drawdown versus a drawdown that's like too big for the investor that will scare them?
Yeah, the answer is it's a simple answer. What does the answer is the customer will tell you. I mean, if like I'm very particular about, I'm a very conservative type trader, so if I want to go outside my comfort zone, I may not be the right fit. Okay, so but if they want like 100% return every 6 months, okay, well, I'll do a model that says you could have a 50% drawdown. Are you comfortable with that? Doesn't mean I'm going to be involved in this, but the customer will drive that. But again, that's in the initial discussions and the transparency I just talked about, where say you really want to find out what is their risk tolerance. And for an trader who maybe has a good track record, this is an area where it may not be their specialty. They may not know how to approach it, and they really, if they're serious about this, they can reach out to groups like us, or to really help them kind of get that in place. And we can design where we can talk to them about things like that. Risk tolerance, identifying risk tolerance is one of the most important parts of the risk management process in trading. What is your customer comfortable with? One thing for me, this is how I base it on my merits. I don't want that call on a down day. I just that is my biggest sort of fear. When it happens, it should be expected. And maybe we can laugh about it. And honestly, with me, I mean, a lot of times those down days are really good profitable days. So, but at what point are you going to get that, get that call? And you shouldn't have it. It should just be on a monthly basis. You have your little wrap up meeting or whatever it is. So you shouldn't do. Avoid that call, and so they know up front. But the reality is, Etienne, on a really, really down day, everybody gets nervous. It's like, what happened? What happened?
Hmm. Yeah, for sure. Good point.
Yeah.
We had a question that I seen before about. Let me just go back and find this. Blair. Blair was asking, what is a typical profit split between the trader and the investor? Is this? I know there's like different formulas, but what would be your preferred way of doing it?
Yeah, it's a good question. Again, I don't really, in my relationships with, you know, my groups, I just, it's different. I mean, I've seen some where, there's like a 220, it's just standard, like 2% management fee, 20%, based on a high water market, we know what that is, but that's kind of a standard. I've seen somewhere go higher. If you're starting out doing this, I mean, I shouldn't worry too much about that. I would be building that
Mhm.
relationship and having seed capital.
Yeah.
If they want to add more later on, once they're comfortable, you can start talking about really intricately designed fee schedules, things like that. Me personally, every person that I engage in a relationship with this type of format, I have a consultant component to it. So I'm doing their backup. I'm doing their reporting because sometimes investors have other investors. I'm a risk consultant by trade, so that's my specialty, and I'll bill for that. And I'll factor in things like that. When you get into percentage of profits, things like that, high watermarks, there's also a regulatory element that you want to be, make sure that you know, dot all the I's and check off the T's. And again, you may need a professional in your particular jurisdiction and country to you want to make sure you clear that up. But my personal thing, I would prefer, um, you know, I'm rewarded based on my expertise and my time. Uh, you know, if there's a percentage of profits, things like that, sure, by all means. But just make sure you go through the proper channels to make sure you clear that through.
Hmm. I think the other thing people forget is that like this is sales. This is where you have to negotiate things that work for you and for the investor. You cannot just like set your price, especially if it's the first time. You cannot just set your target and then go for that because
I,
you have
yeah.
to negotiate a little bit, and that's where like we talked about before together, like learning to sell and learning to negotiate is a really good skill for
Yeah,
traders.
absolutely. I mean, just an example is I remember it's going a few years back, but I was, you know, somebody wanted to entertain, the idea, and a lot of times, sometimes you can get a feel for like, who's the real deal, who's going to be easy to work with. Um, when they start mentioning big numbers and like they almost like they want to lure you, I shy away. I had one where they wined and dined me, and I got to say it was like probably the best wine I ever had. But and then they started throwing numbers like with a lot of commas, like it's like I think it was like 8 million. Somebody mentioned 55 million. I go, look, I says, let's start with 25,000. All right, let's get to know each other. Let's do this. And their fee structure, what I found out was their fee structure was like, well, we're going to give you so much, so we want a really low fee structure. And I says, well, I just don't work that way. And you can get a feel how that's going to work. And I love those initial one-on-ones because, it's like sales. You're right. But the thing is, you'll find is they're almost, and this is contrary to what most people believe, like going out and getting investors. They're actually trying to sell you, which tells me to believe that their money can't find a home. And you would think that would be like an opportunity for the trader to hit it out of the park as far as fee schedules and things like that. But just start with seed capital. Let's see how the relationship goes. A lot of times you can be a good trader, but just the risk tolerance on the other side is they're going to be asking you to take maybe too many chances, and it's just not a good fit. So start small. Trust me, if you're doing good, you'll get that call and say, hey, we're going to dump another, X amount, in there. You can work it out that way.
Awesome. Make sure you guys comment below on your question inside the chat, and we want to make sure we answer your questions because the best lives do like this are always the one where you ask questions. Because I have a ton of questions myself, but it's better if like it's targeted for you. Because I know how to trade for investors, I've done it before, but maybe you need some help with that, and that's why these lives are useful. So that's why we do them. So perfect, Michael. We had a question here about from Niels, who's in the academy. What percentage do you need to make monthly to get an investment?
That's a good question. I think the answer to that, good to hear from you, Niels. Um, I think rather than the actual percentage is the consistency. You know, really investors, and think about it. Think about yourself as your own trader, or like, you want to partner with another trader. You want to see that equity curve relatively smooth. I was looking at a track record the other day, and I saw some really great numbers. I'm like, wow, it's great. And then last year was like a little low, still profitable, a little low. And the first thing I said was, make sure you can address that, like just how you address it, because people get spoiled, and traders want to know, like, what have you done for me lately? So, why did that happen? Did you do anything differently? But I would say, if it meets their risk tolerance, just slow and steady wins the race. Be consistent. You don't want to see those big, dips, because then you have to start explaining them. What happened here? What happened there? Then you start digging your hole, and like Etienne, like in sales training, is like, you know, you don't want to. You want to have control of the conversation, and if you have to start explaining every little dip, you're done. So rather have conservative. Think about it this way too. And here's another way, Niels, to answer that question. If the investor is looking for has a higher expectation as far as dollars and profits, great. Don't change the rate of return. Just scale up the amount. So fine, contribute more, and then we'll get you to your profit goal. But this is my sweet spot as far as return. This is what I'm comfortable with. We can tweak it a little bit with a higher risk, a higher drawdown potential. But that would be my response to that. But that equity curve is, if you have a solid equity curve and consistent, that's the thing you want to bring to the table.
I think that makes sense. People like to have things that are consistent as opposed to things where they could lose their money, and that's different from people that just want to like make money quickly. It's a whole different game. So these investors are there to kind of maybe invest over the long term with you, and that's something that you have to think about for sure.
Yeah.
What do you feel is like the average length of a relationship with an investor? Have you seen like a sweet spot, like they stay with you for a year or 6 months or more, or does it vary all the time?
Yeah, I have a sort of a unique answer to that. For me personally, I'll give you my personal thing. I've seen traders who have a relationship, again, as long as the equity curve's there and doing well. Usually that relationship lasts a pretty long time. It just goes on autopilot. Um, and then there's some investors who are just always seeking, like, you can do X percent, like, 5% a month, but then they start getting greedy and start looking for other places where they want 8% a month. This sort of symbolize that cat fight. Again, you want to be selective in who you choose, and you want that relationship to you know to be solid. Me personally, I'd like to transfer at some point, and usually this is like within a year or two, year to 18 months, to go into consultant mode. So not only do I set them up, I get the, help them get their sort of venture started. Again, this is like the consultant mindset, but eventually, I want to, whether it's, set up the algorithm for them and monitor that, but I want to become more of the consultant on the side. So my shelf life is about, a year and a half, but I'm always thinking, like, how do I help them? How do I add value to their operation as a consultant? I don't want to be sitting there all my life, pushing buttons. I don't know about you, but and now with technology, you set up algos and systemic trading and models and stuff. I like that. It's good for the relationship. It's good for the trader lifestyle, which we didn't talk about, but that's a big impediment on trading for others. And I like that, so you can oversee and manage. And so as far as the relationship, that relationship could last several years. In fact, some I have now are going into my second decade. But it's in a different relationship. It's more of overseeing other traders as opposed to you pushing the button. That's just me, though.
What would be a few tips that you have to be able to keep the investor for a longer term?
Yeah. The first logical answer is track record. But I have to tell you, Etienne, what's probably more important? The transparency during the journey. Um, how do you communicate them about results? How do you, keep them engaged? Um, you know, is this relationship sort of on autopilot, which ultimately you want to do? There's not this like, every 2 weeks you have, headaches and what's going on and this. Being really transparent. So when you have, your drawdowns or even your big up days, you just have your monthly meetings, whatever it is. But I think, it's just like any, whether whether it's you work at a car dealership or you're married to a spouse. How do you keep that relationship going? Openness, communication, compromise, things like that. I mean, these are principles that go well beyond like trading for investors. But you'd be surprised. Track record is probably not like in the top three. It's about just having a good relationship, keeping that trust. When I go overseas and I have client overseas and stuff, first thing we do, we always meet at like this hotel and we have a beer and just kind of, and sometimes the fun doesn't even come up. But it's building that relationship, that trust and stuff. So, um, yeah, it kind of goes with everything in life.
Mhm. Yeah, that makes total sense.
Yeah.
It seems like you have a preference for individual investors as opposed to like prop firms or bigger firms. Is there a reason for that, or this is just like comes this way?
No, no, I think, I mean, I have a nice blend of both actually. I
Okay.
prefer personally to be to help more on the prop side only because of my risk management specialty, and I can help them in a lot of different ways. Like, I can look at an individual, like, individual trader there who's, maybe too heavy, but as on a portfolio level, the prop firm maybe wants to be, go home what they call in our delta neutral. In other words, we don't want too much overnight exposure. So, but there may be like one guy who's too heavy in one thing, but the trader next to him is like short on the other side. Well, as a firm, I'm okay with it if they are. So, I like that type of dynamic, and overseeing the money management in that respect. That's just me. That's my sort of my trade. But the bigger numbers, individuals, I kind of I liked working with them because the trust level really just sits with one person. When you're on a prop firm or on a board, they have a group of people, and maybe they have a board of directors that you have to address things to. I mean, I'm okay with that, but it kind of gets a little corporate sometimes. And sometimes when you add value, you have to please. What do they say? 50 million Elvis fans can't be wrong. It's like you have to please everyone, and there's always somebody who's trying to like justify their existence or something like that. So, um, I like more the one-on-one, and the size is kind of irrelevant, but yeah, a little bit of mix of both is good.
Awesome, perfect. That's good. So once again, just a quick reminder: make sure you guys come below in the chat with your questions, and I'm gonna ask them to Michael fairly soon. If you have any question on trading for orders, finding investors, or whatever we talked about before, or new topics, we can cover a lot of different things about that. So, Michael, here's a question that I wonder about. So, how can you maintain that high level of like trading for investors or trading for others when you want to have freedom? Is there something you can do easily, or you have to kind of make compromise and or maybe become more efficient in your way of doing things? How did you do it yourself?
Yeah, you definitely have to become more efficient. I will tell you this: in the last 5 years, technology has really allowed you to help in the freedom lifestyle, arena. You know, back, 7 years ago, it was tough. I mean, there was definitely an impact on my lifestyle. I mean, I just, and it was really kind of frustrating. I said, do I really want to expand into this space? Because, again, I wasn't taking all comers, and I was really being picky anyway. So I said, do I really, maybe I'll just keep what I have and stuff. But once, the technology kind of is particularly on the platform accessibility. So now you can kind of manage certain things, on a really good smartphone or a tablet. You can go out for a little bit and not have to worry about things. You can have alerts sent to you, um, and also the ability to develop algorithms. Where in the beginning I was always reaching out to people and developers, and to mimic my strategies. And now I kind of like forced me to learn a little bit, and with the help of coders and things like that. That was a big game changer as far as the lifestyle. So um, it didn't compromise as much. So I was more open to it. And for the traders that are thinking about taking that next step into managing money, I think there definitely has to be a technological component, not just for your lifestyle, but also your investors want to see this too. Like what's your what's your default if you're just not there, or your computer goes down, or systems go down, or how quick can you react on something if you're just doing something else. Like remember, most people who are going to trade for investors, they don't have a team of people with them, so their backup system is themselves. And since that you can't be two places at one time, technology plays a really cool role.
Awesome. Speaking of which, we had a question from Gerald, who's also in our
Yeah.
academy. Gerald was asking, so do you need some kind of software to be able to trade for other people? And then also, how do you kind of duplicate your trades to different accounts, especially when you're scalping and like time is a big factor.
Yeah. Yeah, good question. You could use third-party platforms for that type of, for like sort of mirroring trades, stuff like that. But really for, it's I don't want to paint a scenario where you have like, 10 different computer desktops like open with different accounts, things like that. Again, you want to be selective in who you choose. So this isn't like, I mean, I don't have like a take all comers type thing. So I really didn't have to worry too much about that. Maybe just having a couple extra things on there, accounts open and stuff. But a lot of the answer to your question is a lot of the software and things like that. I found that a lot of investors, like once again, you get that trust, you supply that to them, or you make your recommendations how you want to do it. Because one thing you want to do is, as a trader, start having to trade different things you're not comfortable with. Like I always call it technological risk, platform risk, where you're doing what you do, but all of a sudden now you're not familiar with how to set up OCOs and things on certain platforms. But on bigger firms, I will say, like on prop firms especially, you're pretty much required to use their software, your systems. So they're not going to change for you, and that's fine. That's where that's where the consultant fee comes into play, and that's great. So it actually forced me to learn different systems, learn different ways in which from a platform perspective, people manage their portfolios, manage risk, and how I can trade, on those methods. So it's a good question. It's something that again you want to be prepared for. This isn't something where you just say, get money, push button. I mean, I want to be very clear with, this type of scalable venture. If traders are thinking about doing it, there's a lot of work that goes into it, due diligence before you even start, the relationship. And I think you want to make sure you're ready to do that, prepared to do it. Personally, I love it. I mean, it's got to be exposed to so many different ways of doing things, platforms, how other firms do things, and it's actually enhanced my trading as well.
Hmm. Perfect. And usually, if you want to find the right platform to copy your trade or whatever, just a simple Google search and a bit of testing is gonna do it, and you are probably gonna be good with that.
Yeah,
You
the big
find
boys,
things quite
NT4,
easily.
TradeStation, Toss,
Yeah,
they all have things like that as well now. In today's world, 5 years it was a little different. So
exactly. Would you say there's an amount that is worth it for you to trade for other people, or like, can any amount when you start is like good, or I guess like once you become better with that and once you become having bigger amounts of money, then you have like a minimum that you would accept to trade for investors.
yeah, I mean, I think it's you have to take a look at yourself and say, is this worth it? But in the beginning, I mean, don't really look at, other than say if you're going to charge a consultant fee, like a fee based, um, is this worth it? Because the chances are it's probably isn't. Because my suggestion, and I always guide people, just take seed capital in the beginning. Particularly from a potential client that's has more funds, and you're not going to probably you're not going to make a lot doing that. So you're going to start questioning yourself, like, is this worth it? But really, the goal is to scale up, in that regard. So how again, a lot depends on the fee structure. I mean, the conversation maybe 10 years ago would have started at like, who knows, maybe 50,000, maybe now it's like 250. But again, it's all relative. You don't want to put yourself in a position where bigger is always better, because I know you see the profit part of it, where I can do this, or I can do this full time or whatever. But you have to remember that, and here's the key point, and this is another thing that where you really want, say, like an auditor or a risk specialist to oversee this process. Is your trading going to change if you scale up to a higher level? So say you're trading a $50,000 account or small account, or even 100,000, and all of a sudden now someone's going to plop 1.5 million in front of you. Are you really going to trade this exact same way? Are your results going to replicate what your equity curve that you talk to them is going to be? I very rarely do I see that. So, and one of the pre-audits where I suggested earlier is having it certified is, what's the difference in their track record versus their early stages of trading higher capital? Are they taking profits too early? Are they taking moving stops up too quickly? Um, they're sort of like that risk management red flag. So you want to think about it. I know I kind of drifted off the answer here, but it's kind of important that we talked about that. It's really a important concern when you're thinking about doing this as a profession.
Hmm. Yeah, I think that like in many topics, the thing you want to think about when it's your first time is like this has to be a kind of success story or like a case study of like showing this to other people. Because if you have one person that you trade for and you have good success with that, then you can talk about this to other people, and that's like gonna create like a snowball effect of more investors and more capital over time. But you
Yeah,
cannot just like focus on getting all the pennies on the first one because that's not how you build a relationship first, and not how you build a long term career.
yeah.
Career, I think.
Yep, I think you have to really, the trader has to really sit back and say, am I serious about this? This is like, oh, somebody asked me to do this. I guess I'll give it a shot. Get the right team in place, do it the right way, and you can scale the business. Like we talked about earlier, like the communication, the transparency. Sure, you're the face of that customer, but you can have a team to kind of help you, with that. And you can really just like, I really need to focus on my trading, and and maybe I'll have somebody conduct the monthly review or prepare the fact sheet and the results and stuff. Yeah, it's okay. I mean, be part of a team. Don't do it all yourself. Because if one thing Dan, you know this too, in this business of trading, once you start, diluting yourself to doing other things, your trading probably is going to suffer.
Oh yeah, yeah, for sure.
Yeah.
And speaking of having the right team, we have an awesome academy that you're part of, helping people to eventually quit their job and trade for a living, and then eventually after that, getting up their trading to getting investors and all that around. So if you guys want to check it out, and if you guys want to get some help from us and Michael and Alejandro, who is really good with like software, technology, and everything around, we'll try to put the link in the chat. I didn't put it in the description yet, but I'm sure someone can put it in the chat. And that way we'll be able to have this for you guys if you want to apply and get on a call with us. We'll see if that's a good fit for you, if you are in the right position for us to help you, and then what we can do together to help you out progress faster. I know Michael, you're helping people a lot with that, so that's awesome. I appreciate that a lot.
Yeah, it's always fun working with your group, and you throw in a group of passionate traders who want to succeed. I mean, that's bring it. I love doing that.
Yeah, perfect. I'm gonna try to look at the question here a little bit. I've seen Hello put the link in the chat. That's awesome. Thank you very much. Um, I know Gerald, you had a few questions about platform, and I'm sure Alejandro can help with that in the academy. Just send him a message, and he should be able to help you with that for sure. Okay, so now Michael, we get to the tough part, the tough topic,
Yeah.
and that topic is about like regulations and taxes. Oh man, so what are the regulations involved? And I know it's gonna depend like different countries, different even state, different cities perhaps. But how the regulation work typically when you trade for investors or prop firm or other people in general?
Yeah, I mean, it's a topic that has to be vetted. When you're ready to make this move. It's mostly federal. It depends on the country that the firm is domiciled in. So there's a lot of areas that whether it's RIA in the U.S., Registered Investment Advisor, and you have to have a series of licenses, things like that. Um, but a lot depends on exactly the relationship of what you're doing. If you are literally taking funds to manage money, which I personally I don't never take possession or anything like that. Um, that's just me. I don't want to be involved in that whole entire like investment firm game, so to speak. It's very very profitable, very valuable, but it's just not what I like to do. So each country has its own things, and you definitely want to check out their sort of government regulatory bodies to do it. Um, the if there's an actual fund set up in a certain country, you could discuss. You have to learn that type of setup in that particular country as well. But you know, other options to consider is like, what's my role in this? Is am I in like in a sense where I'm trading an account with a sort of like a power of attorney type thing, or you know am I a consultant in the sense that like say with a prop firm where I'm going to come on board on a consulting role and help them develop strategies, implement them. I'm not necessarily pushing the button. They have control of their funds the whole time. They can turn it off, so to speak. Like if there's an algorithm running, they have complete control. So control is a very important element to the regulatory aspect of things. And now there's like even third-party platforms that, you know, people can subscribe to your sort of money management type services, and there's not necessarily like a regulatory hurdle. But again, it's something that definitely has to be vetted early. I love personally the consulting aspect of the money management role. So I approach it as I'm a consultant to help you become successful. And if it means, you know, others in the group actually doing the trade executions, then that's fine. There's a lot of elements to it, but again, check your regulatory things. You want to make sure that's vetted first, and with the country, and also see what is going to be my role. I know there's a lot going on there on the regulatory side, but it's important to discuss.
Hmm. And the other topic I had to talk about is taxes. So
Oh,
when someone pay X amount of taxes doesn't mean you pay the same, right? That's totally different. So someone might be in a different country where they pay no taxes. They might be in a place where they pay a lot of taxes. And then even within that, there's different like categories of trading. It's like this spread betting, as someone was mentioning in the chat. There's trading in general, which is maybe more capital gains. So, do you want to add your thoughts on this, Michael, or
yeah.
is that
Yeah,
kind
sure.
of
I mean,
everything there
the,
to it?
the canned answer is always have, a tax professional handle things
Yeah.
and stuff. And I recommend that actually too. But there's different things. One is the actual format of the fund itself. So there could be capital gains. And again, different countries have different ways. In the US, options trading has certain type of gain benefits versus and futures have some really cool benefits in the US, but maybe in other countries it doesn't. It's treated as like normal income. But if also the structure of the event. So if you have an individual investor, that individual is probably going to have an individual account. So they're just going to have like whatever their taxes on ordinary income or whatever it is individually. If they set up a C corp or some type of investment corporation or a fund, that fund can be its own entity to where the fund has to pay taxes. So and again, this is I'm just where I hear about it. I'm in these discussions sometimes, but I really try to that's not my specialty. So I take a back seat. I learn, I understand, but and I listen to the guys in the room who specialize in this. But once you start getting involved in that, and I'll even go another layer. If you have a fund that has different partners in it, so they have different share amounts. Now you're talking like a partnership where in the U.S. is like K1 statements, so they get the profits proportionate to their share. Oof, boy, I mean, um, it's it's massive, and I see these like K1s they call it in the U.S., but I know that other countries have different ones, and I don't know. Once you see a K1, it's like for me, it's time to run out of the room. It's nuts, and I see the people preparing these things. You remember each individual sort of partner has a different share and it has to be allocated. It's nuts. So that to me, I'm good at some things, and others I just even if I have some knowledge about, I just don't want to get in there where I can add value in that space. So I let again another professional. The good thing is if you have someone a fund is that big and they have maybe a partnership or a different setup, usually at that point they're comfortable with allocating certain expenses to those professionals.
Of course, definitely. And like you mentioned, that's something that I've also been learning in the past year or so. But like setting up my business in a different country and everything around, and it's not something that I want to get involved with more. It's just a lot of different things that you have to think about, and to be honest, I don't have time to spend to try to learn that all. So, but it's really get someone else that knows it, and then you have the peace of mind that you need to trade right and just do your own thing. So,
Yeah, and by the way, there's some really cool. I mean, it's not just getting good accountant. There's some trader tax specialists that are really great,
yeah,
and
yeah.
especially, and I use a few that like I always refer to, and they're good. There's also like they'll do things like trader tax status, where a certain trader can qualify to be as an entity, its own trader. So there's a lot of tax benefits in that regard. I mean, they do it all, and like they're really good. I mean, I envy what they do, but again, they're just. I mean, they couldn't trade like we do. So it's just it's a nice that's what makes for a nice partnership.
Perfect, awesome. That was a good answer, I think. So I'm gonna check I'm gonna look at the question quickly once again. Let's see here. Okay, I'm not sure I understand the question really well from Water, but the question is, what would Michael do with 10K, so $10,000? And the way I'm gonna phrase this is like, if you were to start all over again and you had $10,000 and you were starting to learn to trade, how would you kind of do things with that $10,000?
Yeah. Well, I mean, it's what I do with 10,000. Probably, go to a nice hotel on the beach and drink pina coladas. That's it. So no, but I mean, if you're talking about seed capital of 10,000, I mean, and sure, that's, I mean, there's, if some investors say, look, could you trade that for me and stuff. Um, you know, I think everything is scalable, but you have to just again, it starts with things we mentioned. What's the relationship like? Is it? I would suggest like a friends and family type arrangement in that regard. I would almost recommend like family, and if not friends, and you could, friends is a pretty big scope, but have a relationship with them, explain what you're doing. The costs for like a $10,000 account is going to be proportionally higher. I mean, trade commissions are going to be the same. Um, the fees that you may have to charge may be a little limited. But again, everything's scalable. But also, let me paint like the positive picture on this too. If there's person who just wants to say, look, I got 10,000, can we maybe do something? It's a good starting point. We talked about seed capital. That's probably like the smallest of seed capital. But if both parties are open to doing that, again, start small. I know in our academy, on the academy, we talk about graduation plans and how you scale up the business. Same rules apply, but you are going to be starting very small. So, an expectation, say, of 3% a month is, what, $300 or whatever it is. It's all proportionate. So, but just remember the fixed costs come to play in there too. And as long as both parties are aware of that and understand about it, I think it's good. Don't get start small, and if 10,000 is small, that's fine.
Yeah, exactly. And like you mentioned in the academy, one thing we talk about a lot is going through these like increments over time. And there's nothing wrong with like starting slow or starting low. People say, "Oh, like how much money do you have to begin with?" And there's no starting point. You just start with whatever you have, whatever makes sense for you, and then you make a plan to increase that over time. And if you don't have that plan like written down for you and us helping you do that, we can help you for sure. Use the link to apply that should be in the chat, and that link can allow you to apply for the academy and see if you could fit. We'll get in a call and make sure we make a plan to help you grow and become a better trader and eventually quit your job and trade full time.
Yeah. And
So we can
Lisa,
help
let me
with
just
that.
add one more thing to this. Think about like when we have equity curves, or you see a lot of equity curves. A lot of equity curves, for some reason, start at that magical 10,000. Like you see, like if you started with 10,000, this is what the equity curve would be. So, it's this is a legitimate opportunity. That I don't want to downplay it and stuff. And but you see that 10,000 that over so many years could be like 125 or whatever. If the investor is comfortable with that and say, hey, look, this is so your equity curve starts at 10,000 and goes to 125 over so many years. Well, here's 10. I'm willing to start with 10,000. So, but I think this is my little caveat. I would, if you're being selective, and I always am like incredibly selective of who I even, entertain or talk to. Um, my hopes would be that 10,000 is seed money. So, there's additional funds or potential funds down the road because, yeah, that's how you really can leverage, your business as a specialist.
Exactly. Good point. One thing we didn't touch on that I kind of didn't think about, but it's a really important point, and Niels mentioned that, is so when you trade money for other people, do you set the contract for a specific number of months before they can withdraw their money and before you kind of stop trading for them, or is it like a starting point but then no finish line? How did that go?
Yeah, the term in legal terms is called the Evergreen Contract, and basically it's evergreen meaning it exists until one of the parties say it doesn't exist. I have a really this is part of like my transparent kind of lifestyle and how I do business and stuff is if at any time any customer for any reason feels it's not a right fit, that's fine. I mean, it's like maybe it's like a spiritual approach to sort of legal contract, but like let's work. And if it's not going to work, and by the way, that applies to me as well. If we realize this is going in a direction that I'm not, or affects my lifestyle too much, and it just yeah, it's fine. So it's evergreen. I always think evergreen until like sort of whenever one of the parties says it's just not working or whatever. I will say this though in my business contract, I always on the compliance side or on the risk management consulting side, I like to have more of a non-evergreen because there's a lot of work in the beginning to set up infrastructure, things like that. So I may have a minimum requirement, say of 12 months or things like that. But again, you know, even contracts like that, it just, if it's not a right fit in both parties, there's so many, why fight it? Fight it. Just end things on good terms and whatever. But so if that answers your question, evergreen until no longer evergreen.
Good. Did you ever have any kind of bad relationship with any investor, or any bad times with an investor in the past, or did that always go quite well?
Yeah, how much time do you have? No, I've had. I'll give you a couple examples where, and again, this is where I can't emphasize doing the due diligence in the beginning. Like, who are you going to have this business relationship with? And again, like that, I could say friends and family, but really, like, okay, family's family, but friends is like, what is the relationship? I always like to have a friendly relationship with the person. I've known them and things like that, and then let it blossom from there. But uh, I had one where, like, it was great. It was all set up, and I was a little skeptical about the dollar amount, but they said it was, and then they showed the funds, but within like the first month, they were like, "What about this trade? What about that trade? Or why'd you get out of this one? And why'd you get out of that one?" And everything just changed. And then I always have it to where they have control of their accounts, so they can trade their accounts or whatever. But I want to dissect my strategies, from that, and it could be electronic or whatever. But then, like, the whole results were getting mishmashed. I'm like, this is nuts. So it got like, and I remember I was at like a conference in Vegas, and I remember like all day I was running to like a pharmacy to use their copier and fax and everything, and it was just like, this is ridiculous. This is like, because they wanted documents and additional this, and then we wanted to have a review like every other day, and I'm like, yeah. So I clearly set the grounds, but it wasn't the case. So so we walked away. There was, it was a lesson learned too, but I had all the parameters that it was going to be a good relationship. It just, once the buttons start getting pushed, things tend to sometimes happen, especially if, like, maybe the equity curve takes a little bit of struggle in the beginning or something, you're getting used to it. There's a lot of interesting stories. Some I like to forget, but nothing like terrible in the sense. Again, do your homework, prepare in the beginning, because once you go live, it's like the curtains on Broadway open, and the Lion King may be on Broadway for 15 years, but you're in day one of your opening act. So be careful.
Hmm. But like in any business, right, you're gonna have times where you have bad customers, and even if you want to do everything right, you hit still have those bad customers no matter what.
Yeah.
So that goes for doing videos on YouTube. You get these hate comment, or trading for other people. You make them money, but then you still get some bad investors, which happens,
Yeah.
of course. But you can
Greed is
always.
toxic, no question. And sometimes, having really good performance, it breeds greed, and all of a sudden you have like an average performance, and 1 month, and everybody's like, up in heels. So again, having that transparency and relationship in the beginning and being very selective. I know maybe some of the listeners are watching, maybe like, this is good, I'm going to take this next step, and but really, like, vet it out clearly. Like, you make sure you're in control. You know, don't look like a take all comer type thing. Um, this could be a really fruitful venture that you do, and a part of that scales up your business as a trader. But um, you want to be very selective. Who wants to go home, go to bed at night thinking about this, crazy guy who just bent your ear for an hour about a trade or something? That's to me, I'm beyond that, well beyond that. And again, like, you say in the club, we have a no haters policy. Like, I don't, I just want to surround myself by positive people, and I'm willing to work with them.
Like that, perfect. So what are your thoughts on prop firms like FTMO or like all these other prop firms, 5%ers? I could name like 1,000 of them, but let's just go with like, what are your thoughts on those?
Yeah, it's a fascinating element of the business that it's becoming more prominent. Every year. I think it's a really interesting option from the business side, business model. I think it's phenomenal. I mean, it's from on how that model works on their side. But from a trader looking to trade capital, and let's say you want to trade for investors, if you get firm capital, whether it's a prop firm or these type of traditional prop or these types, you're managing you're trading firm capital. So it's just like getting an investor. The challenge, the problem I have with this is, and this is the big like sort of beef I have. I know everybody wants, that event. They want to get more capital to trade. They feel like they got a strategy. And what they do is they take these challenges and then they fail and they take another challenge. And maybe FTMO, they don't pass, so they'll go to the fivers and they'll go, and it's like, here's the one thing. You're getting it all wrong. Get the knowledge and the expertise on how to succeed doing this, because they're very specific and they all have the same parameters regarding risk management, how managing capital, the profit margins and things like that. There's a very simple formula, and that's needed, that's blanket across all of them, but they just want to take the challenge, take the challenge, take the challenge. The opposite: get the knowledge, learn how to do it. Like you take the SAT prep class when kids take the SAT class before they go to college. What do? They take the prep class. So take that and then do it. Your rate will be higher. You'll get funded, with a better success rate, and you'll be able to manage that a lot better. I see it all the time, and I feel bad, but it's just like everybody keeps trying to throw darts, and that's why the initial challenge success rate is relatively pretty low. So that's the first thing. The second thing is, once you get funded, now you really, you want to start, like, you really need, it's not just the education goes away. Have the people in place to help you get to those higher levels. Because let's face it, it's great to get funded, but at that initial level, it's not going to really help you that much. Make an impact on your business or lifestyle. So now that you got in the door, now you really want to scale that up properly. And again, that's where a team comes in place. I congratulate all the people who have done it on their own, but I don't know too many of them. So.
Perfect. And yeah, I published a video on that a few days ago on YouTube. And you need to think about the fact that, yes, like a platform is good because you get the money quickly and fairly easily. But there's some downside to it. There's some things that you give up. Like you don't have as much flexibility in your trading style. You don't have as much upside, like we talk about. Like they have a limit of capital you can get, and you got to go to the stage first. That could be like much faster achieved with an investor. So these are things you need to think about for sure.
Yeah. And one thing I'll add, like, say you have a larger prop firm or like in a big city, as opposed to that, you could use these funding vehicles. And again, I suggest you do it with like a coach or something like that. But you get it to the point where you could use your funding and your success through the challenge as building part of your resume to now approach some of these big prop firms in the big cities like New York and London and things like that. Say, look, I know it's tough to get into those prop firms, but you walk in with a coaching arm, a successful track record, successfully completing challenges. Those prop firms look at that as, this guy knows risk management. This guy knows how to limit loss, how to take profits. That's what they're looking for. So sometimes maybe you'd be looking for maybe an FTMO challenge or something that's going to give you 10,000, 20, but you could use that resume with maybe a certified, coach that can support that resume, and then you go walk into an SMB, and it may be a game changer for you. So don't think that these, the fivers is like the goal in the journey. Maybe it's just the step.
Yeah, that's a good point. I want to take a few more questions because we're already like an hour into this live event. So we'll go with the question from Leonardo, who asked, in the actual market condition, do you just trade your plan like you have been doing or before, or do you adjust your plan because the volatility and the moves in the market?
Great question.
So I'll let you answer, and I'll speak for me after. Go ahead.
Oh, sure. I like to trade. I'm very simple. I like to trade my plan. I mean, that's what I do. That's what I specialize in. And most investors really won't argue with that. I mean, that's why they maybe came to you in the first place. Hey, I like what you're doing. Once you start deviating, now you mentioned a good point in the question, is that do you change your plan based on volatility? Well, that's in my trading plan. So I'm certainly going to adjust size and things like that. But that's based on my plan. But I think the big question is, are you going to adjust your trading style because of another, a firm's risk tolerance and stuff? I can play with it a little bit, but I don't want to go too far. Remember, this is like, I do what I do. And, if I trade Forex or trade futures, and now all of a sudden you want me to trade, RBOB or Brent crude oil, now you're kind of taking me out of my element. and the results, may suffer. So to me, that's answer your question. I'm curious what you have to say, E.
Yeah, yeah. I like this because we're not gonna totally agree on the same thing. So that's perfect. So I know, Michael, you have like a few different setups that you trade. I personally have like one main setup that I trade in general terms when the market is like in general terms. And right now that's different, right? So I had to adapt a little bit my style, and I had to go back to like older setup I was trading before that I knew well, but that tend to work a lot more in this market condition. In times where it's sideways a lot, then they don't work too well, and that's where my other kind of setup and style works a little bit better. So I don't think it's like about changing everything, but it's just about like tweaking a little bit what you can tweak in the same market anyway, but just to be able to kind of take benefit from the moves that's happening in the market now. So the reversal we have now don't work as well as before. Some still work well, and I could still like go with that and maybe have a few small good months or a few small losing months. But want to try something different and kind of adapt to the market a little bit. I think that's the way to go for me. But again, I usually only have one trade set up, and you have probably a lot more. So that's
Yeah, but
probably where we vary.
that's our value offering to investors or capital. I mean, we have the
Yeah,
ability to
of course.
adapt to the market
Yeah.
conditions. I mean, that's what makes us feel different and special, and would attract type of capital, things like that. So that's what we do.
Perfect. Awesome, Michael. I appreciate this a lot. As a last reminder for you guys watching this right now, we have two kind of options for you right now. If you want to work with us and if you're serious about it and really want, we don't think people are actually really serious about it, we have a link below for you to apply to the academy. That's going to allow you to work with me, Michael, Alejandro, and a bunch of other traders who are trading full time or getting there. And the goal for this to be able to allow you to quit your job eventually and trade full time. The other option is if you want to start with something free, we have a case study that we'll link also below in the description. That case study highlights some things that you have to know to be able to kind of improve your trading and get profitable. So if you're not profitable yet, that's something you can look at for free, totally free, and that's gonna be linked below as well. So those are things we can give you now to kind of progress. And if you have any questions, make sure you comment below the chat or the comment section. I'll be looking at those as always. It's gonna be recorded, of course. And thank you, Michael. I appreciate it a lot, and we'll catch you guys pretty soon. Anything else? Any last comment you have, Michael?
Yeah, always a pleasure. Always a pleasure to speak with you and your group, and future investors that are looking to take the next step. Just follow the path, follow the dream.
Awesome. Have a nice day, evening, or morning, or whatever, guys. Thank you. Ciao.